So today we're going to be talking about stocks, bonds, and mutual funds. I'm going to explain what they are and how they're used in conjunction with each other, and then we can talk about what the best option is for you. Stocks are basically the piece of a company. If you think of a pie, you just have a slice of the pie. They're valued every day, during stock market hours on whatever exchange they're listed on. And so that means that they're valued most of the day. So that means that they're very liquid. You can sell. There's usually a market to trade them on. So they're very liquid investments. But that also means that they can change in value pretty rapidly. So while there's more upside, there's more risk. And so there's a lot of downside risk with stocks as well. The next one is bonds. That's another type of investment. And that's basically a debt type of investment. So you're either lending you're either lending money to a government or a corporation, and then they have a interest rate that you agree to pay. They agree to pay you for your money. So these tend to be more stable than stocks, and so they tend to provide some ballast in the portfolio if you have stocks and bonds together, which is a good use case for them. And they're also good at generating income because they have coupon payments. Mutual funds are separate from both, but they're really more of an investment vehicle as opposed to just stocks or bonds. And so a mutual fund is a fund that has either stocks or bonds or sometimes a mixture of both all in one. So they usually follow some type of index like the S&P 500, but there's different types of funds and there's lots of different types of mutual funds. But they're a good way for the average person to invest. And the reason for that is just because they provide diversification. So like if you were to buy the S&P 500 mutual fund, you're getting around 500 of America's best companies and stocks. They also, like I mentioned, there are different versions. So it's not all index funds. And there's different wrappers that you can purchase mutual funds through. But for the purposes of this video, we'll keep it high level. So what is the best option for you? That really just depends on your situation and the complexity of your situation. So if you're investing in a 401k, you likely only have access to mutual funds. And that's great for investing in a 401k. As your situation becomes more complex, then like if you were to go through financial planning with Wiser, what we would do is we would go through your financial plan, because while investments are important, we like to look at the whole entire picture of your financial plan. And that's what guides our decisions on your investments. So we can provide investment advice through our flat fee model. And we can also provide investment management through our assets under management model. And like I mentioned, the financial planning process is what guides our decisions and guides our advice to you on your investments.